Good morning, everybody. It is 9 a.m. Wednesday, December 21st. Shortest day of the year, not in terms of stock trading, but in terms of daylight. So we've got SPY here starting with a little bit of weakness. We're testing key resistance right out of the gate, and we can see on the 5-minute time frame, the 100 and 200 period moving averages are lining up at the same level, 226.24, and that is also lining up with the hourly moving average resistance, which is 226.34, and then the 20 period is 226.26. Let me just fix this mic real quick. Sorry about that. We've got a loose wire and got a new one in the mail. Should be coming tomorrow. But on SPY here, you look at the last 2 days and the 20 period moving average. We've got that holding on Friday, and it held, or I should say on Monday, and then it held again yesterday, and now it's starting as resistance, and we're back testing and currently rejecting from that level. So if we cannot get over the 20 period and 100 period moving average resistances, we are going to have a little bit of a bearish tone to start today. We're going to be looking at the low of yesterday, 225.88, and a key support I'm also watching is 226.02. And yesterday, let's look at that action. We had that end of day bearish action, but we bounced off 226.02 right here. 1, 2, 3, 4 candlesticks. The low was 226.02, and then look at the low of pre-market, 226.02. So that's definitely a level that's coming into play here. And if we break 226.02, we will expect to potentially break the low of yesterday and continue to show some downside. But as of right now, bulls are still holding up just fine, and we are back testing these resistances. Bulls are trying to start the day with all 5-minute moving averages as support. So checking in on the daily chart for SPY, we've got that bullish break of the tightening pattern where we had a higher low and a higher high breaking from that inside candlestick, and we're pretty much looking at the high 227, keeping in mind that that's with the dividend factored in. So if we break 227, we get higher lows and higher highs and continuation for the bulls. And if we break that low of 225.88, we have plenty of supports because we've seen higher lows the past 5 days in a row. So definitely plenty of support. The bulls are definitely still in control, and we'll see if by the end of this week we can keep the upper Bollinger Band on the weekly time frame, 225.77. That is the level the bulls want to hold to negate the bearish reversal doji that formed last week. The dollar is seeing further weakness. Look at these lower highs and lower lows now of consolidation. And the key level to be watching is the low of this bull flag consolidation that led to a new high. That low is 102.52, and that's a pretty key support level because if that were to break, that's really the strongest established support we've seen over the past couple of days. So that is where we are headed, but keep in mind the RSI on the hourly time frame for the dollar is pretty close to oversold at this point. It's just above that 30 mark, and we've seen 6 red hours in a row. So we should be in for at least another short-term bounce like we've been seeing here. These are a couple little bear flags before continuation to the downside. But this consolidation in the dollar has led to a little bit of a bounce on gold with higher lows and higher highs. So for me, in terms of seeing gold strength, number one, I'm looking for a break of 1142.17, 1142.20. We have a couple resistances there from the high of the bounce attempt. And really it comes down to the daily chart and the 10-day moving average resistance, which keeps rejecting every bounce attempt the past couple of weeks. And that level is currently about 1143. So we have to keep a close eye on it, keeping in mind that gold formed a higher low yesterday, and now the bulls are looking to see a higher high by breaking that 1142.20 level on the verge of a bullish MACD cross, and our oversold bounce could be underway here, and looking for potentially a more significant oversold bounce than we've seen yet, as we've seen plenty of bear flags. But if we get over that 10-day moving average resistance, in my opinion, it will be more than a bear flag, and we'll see a little bit more sustainable upside. But keeping in mind that the overall trend is absolutely bearish, so stop losses are essential. And looking like we have a little bit of bullish action here in gold right now. Need to see a break of that 1142 level. Checking in on silver, it too has seen a strong bounce, but silver broke to lower lows, whereas gold hasn't. So there's always these little discrepancies between silver and gold, and as of right now the bulls are looking to break their lower high, and that's up at 1626. So 1626 for silver, definitely worth watching silver because some bearish action. We had a little bit of a heads up when silver started to go bearish here, and then gold started to go bearish a few hours afterwards. So I always keep an eye on both just to see the comparison and to see if they are on the same page. Oil hourly chart saw some nice upside overnight, but we do have a bit of a double top. That high was 53.75 and we hit 53.76 and we're now consolidating. So a double top by a penny. The key support is 53.11, the low of this pullback back here, and you can see we're breaking this higher low pattern on the hourly. So pretty much the range right now is 53.76 and 53.11. We will see which breaks first. The daily time frame has seen 4 nice green candlesticks in a row. Long way to go today. Inventory reports coming out in an hour and a half, but watching to see if we form a bearish reversal candlestick with that little bit of a double top. Natural gas, huge bull move here on this hourly candlestick, trying to turn the trend around from lower highs on the daily and on the hourly as well. Look at this rejection point of 3444. We have rejected 5 times, and we are currently rejecting again. The bulls really want to see this candlestick close over that level and look for further continuation to the upside. We are looking at 350 after 3444 if the bulls can get over that level, but we are forming a nice bullish reversal candlestick on the daily time frame now, and we'll see if we can confirm it. We've seen a few bullish reversal candlesticks with no confirmation in the past here, the past couple weeks. So bulls are out to start today, but 3444 still a key level to be watching. And checking in on Bitcoin here, the daily chart has seen nice continuation for the bulls breaking out. So once we broke above the recent highs back here of 778.70, pretty much 779 if we want to round to a nice round number, that break is when this breakout really took off over the past 5 days. And that's because we've got higher highs now. And when we zoom out and look at the weekly chart, this is a pretty significant break because we are the highest price we've seen really back in the past 2 years almost. So the next resistance we're looking at is up at 800 psychological, which we are currently over. And then I would be looking at 845. So bulls are in full control of Bitcoin. Really bullish move here over the past couple of months and up at the high of this move currently. Let's see if the hourly time frame is overbought. We are pretty overbought, the low 80s on the RSI, so consolidation could be coming, a potential bearish reversal doji on the hourly, but the bulls are definitely in control of this trend. So let's look at some 5-minute time frames here. Sorry about that, Mike. Keep giving me the heads up. We'll keep fixing this, and then the wire will come tomorrow, and all will be well. So the SPY bulls are showing up here first thing pre-market. We're close to the highs of pre-market, so we will be keeping an eye on the bulls to turn these hourly moving averages into support. If we can get above 226.34 and turn all those moving averages into support, we will be looking for the bulls to start the day with a bunch of strength. So let's look at these 5-minute time frames. Let's start with NKE, which had earnings, and we're seeing a bearish reaction to earnings. NKE is on the resident bear list for a reason, and that is because all of the downside that we kept seeing. So the weekly chart is just one big downtrend for NKE, and even after a bullish reaction to earnings, we are seeing this weakness. So the high that we saw for NKE last week was up at 53.22, so that is a resistance level we are going to be watching, but as of right now, a big pullback here, profit taking. 52.21 is key support going forward, and it's really going to be a battle between the bulls and the bears. A very strong bullish reaction first thing is potentially being erased here pre-market, so we need to be watching closely for a potential sell the gap up open on the daily or on the 5-minute time frame, and a loss of 52.21 will lose all 5-minute moving average supports, and we'll certainly be looking for a lot of weakness if that level is lost. Checking in on Amazon, bearish reaction to that news it looks like, so we might see a gap down open here. The low of Amazon yesterday was 767.71. Bulls are still defending that level. I'm looking down at 754 if the bears do step in today. So that's a key support level, and looking for some weakness in Amazon. We've been seeing a very strong correlation in Amazon and SPY the past few days. So if SPY consolidates, which as of right now there's no real sign of that, but we would be looking for Amazon to pull back with SPY. So interesting to see this bearish action and not exactly correlating with the overall market as SPY is holding up. And if we start with the day with all 5-minute moving averages resistance, 769.68, 770.22, we will be looking for some downside on Amazon as we're coming up on hourly support of 767.09. So bears potentially in control of Amazon to start today. Plenty of hourly support levels to be keeping an eye on, but certainly some selling this morning pre-market. MU, bulls in control on the 5-minute, 2079 support, followed by 2071. Looking at the daily time frame, we've got a very strong daily chart, but a bit of a double top, 2099 and 21. So the bulls clearly need to break those levels to see continuation and higher highs. And $21, psychological resistance. The bulls have been forming higher lows and higher highs the past 2 days. And if we break 2080, the high of yesterday, which it looks like we're off to a great start to do so this morning, that 21 level is the very clear level that the bulls want to break above today to be showing strength going forward. So the daily chart absolutely favors the bulls. Key resistance test coming on MU. Close above $21, ideal for the bulls. VRX 5-minute moving averages support 1468 and 1467. We saw a nice bounce on VRX over the past few days and to end last week and to start this week. But we have to keep in mind the overall trend is absolutely very bearish still. So we have resistance at $15. It's a little bit of a double top with a high of the day last week and a high of the day back yesterday, or on Monday, I should say. So if we break $15, the middle Bollinger Band daily resistance will be the next level to be watching. And it's a scenario that I keep talking about where the bulls need to prove themselves, because right now we have VRX in a very clear downtrend with lower highs and lower lows continually over the past what feels like forever, but in reality it's just a whole bunch of months with the bears in control. So VRX, $15 clear resistance, all 5-minute moving averages support, and need to see bullish continuation. Tesla was a huge bull yesterday, and we saw a close at the high of the day showing tons of strength. So 209 was that high of yesterday, and if we break that first thing, we know the bulls are still strong heading to the upside. So after 209, next resistance I'm looking at on the daily is 213.70. So the upper Bollinger Band on the daily time frame, we have to update that level at the open.
Continuation for the bulls. And we need to be looking for the low of pre-market to hold here. The 100-period moving average is 208.04. And we can see we've consolidated down to 208.07 on the 5-minute time frame. So if we break 209, the bulls will be very strong to start the day first thing, and we'll be looking to hold over the upper Bollinger Band on the daily time frame going forward. So strong day yesterday, strong start here pre-market, break of 209. Definitely looking for a Tesla continuation. So JNUG, we're looking for some short-term upside as well.
And for JNUG, we've got all 5-minute moving average as support. We've got 431 and then 429. The low of pre-market is key support, 425, and we've got resistance of 442 and 443. So for JNUG on the daily time frame, the bulls need to confirm the bullish reversal candlestick from yesterday. 432 was the high, so we are starting with a potential little gap up here. And then we're just looking at the lower highs from the past 4 days on JNUG. Resistance at 445, 478, and then 495 after that. So the bulls are attempting to turn around this trend here short term. As we know, the overall trend absolutely bearish for gold and these miners, but short-term bounces will occur along the way. We just need to be quicker with our entries and exits. We do have hourly support at 419, the 20-period moving average. So keeping an eye on the bulls short term. We're looking for the dollar to continue to show some weakness and for this gold bounce to be underway. And again, the 10-day moving average resistance for gold is very key for me going forward in terms of believing this bounce, so to speak, for the bulls and the bull miners. But JNUG today, definitely worth looking for a bullish position if we see the break of these highs of pre-market, 443 and 442, a bit of a double top at those levels. So CGC and OGI, we saw bullish reversal candlesticks in the entire sector yesterday, and we need to see confirmation of this today with another strong green day. So the key resistance on the entire sector is the high of the day. We must break this level and see a nice strong green close to confirm the bullish reversal candlesticks. So the fact that we're not seeing a gap up open is almost a good sign for the bulls, because the gap up open has led to profit taking time and time again. So we're not going to get that sell the open signal that we have gotten so many times. Now the bulls need to prove themselves, and watching the 5-minute time frame from yesterday will be very important, as the bulls need to maintain this higher low and higher high pattern on the 5-minute going forward. So every time we pulled back and consolidated, a low of support had formed, and we need to see CGC break the high of 944, and we need to see OGI break the high of $3 even psychological. So the high of yesterday, very key resistance to be watching for the entire sector, and if we break that first thing, it will be a good sign for potential confirmation of the bullish reversal candlestick we saw yesterday. GDX, high of pre-market, is 1928 resistance. We need to see the bulls break that level to see a higher low and higher high pattern. And same thing with what I've been saying on gold and the dollar and the bull miners. Bullish reversal candlestick yesterday, close at the high, seeing a little gap up open today. Key resistance is 1942. If GDX breaks 1942, we're looking to fill the gap up at 1981. So definitely looking for short-term bullish action, and the key resistance for gold to break today to show a lot of strength would be that recent high that we have seen, and that is up in the 1142 level. So we do still have a lot of work to do for these bulls, but the hourly chart does have a nice higher low, higher high pattern over the past 24 hours or so. So bulls in control for the short term, and a break of the high of pre-market for GDX 1928 will show continuation for some of that strength. Haven't looked at Twitter in a while. Very bearish start, and looking like we're down at 1759, so a potential gap down, and certainly a gap down coming. Bears have been in full control of Twitter the past 5 days, absolutely dumping, and now we're seeing the culmination, so to speak. This could be a potential buy the gap down opportunity, because the 200-day moving average is 1754. So keep a close eye for an oversold bounce here. 20-period 5-minute moving average resistance is 1769. We know that level needs to become support to be looking for this bounce to play out. But on the daily chart, after 5 big red days in a row, a gap down open right at the 200-day moving average, we could see the bulls attempt to defend that level, and we'll be looking for a potential bullish reversal candlestick to form off that level. We have held this 200-day moving average support the last 3 or 4 times we have tested it. So 1754 key level, we'll have to update that at the open, and we're going to be opening right around that level here for Twitter with this gap down. CIEN, support is 2435, resistance is 2467 and 2473. So CIEN had a bullish break over the past couple of days after normal healthy consolidation, but we are seeing a bit of weakness here now pre-market as we are opening pretty much in the middle of the range of yesterday. So yesterday resistance 2497, just below 25 psychological. If we pull back today and formed a bearish candlestick, it will be what we call an equilibrium, where we have our big breakout, consolidation low, a lower high on the daily chart right at that $25 level, and then the bulls will pull back and look to form a higher low compared to 2322, which was the recent low of consolidation. So CIEN 2468, 2472, 5-minute resistance, and then support is 2435, and the low of pre-market 2446. So the bulls are definitely holding up well on the daily time frame. It's just a question now, after 2 days of really nice movement to the upside, do we need to consolidate a little bit? And we'll be watching the range of yesterday's candlestick for some clues. Bitcoin covered that, bulls in full control on the daily time frame. Checking in on Apple, tight clear range on the 5-minute time frame, 116.81 support, 116.91 resistance. Apple Apple is one to watch for consolidation after the bearish reversal candlestick yesterday. All right, so Apple, the one to watch here for consolidation. If we see weakness in the market, look for Apple to consolidate as well. Bearish reversal, inverted hammer on the daily time frame. The bulls have been in full control now for multiple weeks with higher lows every single day. If we break 116.68 today, we are looking for consolidation. Ideally, we want to see the market consolidate as well. We want the market at our back on every trade, but Apple will be one. If we see some weakness in the market, look for a bearish play on Apple. And if we break that 116.68 level, it will be the first time in multiple weeks we have seen a lower low on the daily time frame. So key levels on Apple, 116.68, and then we will look at hourly support, which is 115.83. And you can see we're on the verge of potentially losing this 20-period moving average on the hourly. That level is 116.83. So break the low of yesterday. Highly likely that we confirm the bearish reversal inverted candlestick that formed yesterday going forward. So Apple is on bear watch, especially if the market consolidates with it. BAC was one of the weaker banks yesterday. A lot of the banks had really nice days, and BAC did not. So a very tight range. A break of 22.61 will be bearish, and a break of 22.83 will be bullish. And you can see how tight this range is here pre-market as well. So that low of pre-market, 225.54. And I don't really count the first candlestick pre-market as it takes a little bit for things to settle in. So 225.50, 220, let's try that again. 22.54 key support if we break the low of yesterday, 22.61. Just keeping in mind that the daily chart is showing a lot of tightening action, and pretty much every other bank had a more bullish day than BAC did yesterday. So looking at the hourly time frame, we've got the last hourly support is 22.54, and key hourly resistance, which rejected the price yesterday, is 22.73. And watching Sorry for these terrible noises, everybody. Just as frustrating for me as it is for you trying to run through all this here. But we will get it sorted out ASAP. So we'll keep trying here, and I'll keep resetting this mic as we keep continuing to have screeching. But as of right now, BAC is one of the weaker banks. We have a clear hourly channel to be watching, the 200-period moving average support, the 100-period moving average resistance. So keeping a close eye on that channel, and a break this morning will give us which direction we need to be looking at. Also watching Apple for weakness today. If the market pulls back, Apple is going to be one of the top bear plays that we watch. So Amazon weakness first thing, and all 5-minute moving averages are resistance, but we are seeing a bounce now. So there's going to be a battle today, and I think that Amazon is going to have some nice volatility with all of this volume we're seeing pre-market and this back and forth action battle between the bulls and the bears. So we'll be watching for the 5-minute moving averages, and also the key hourly moving averages for Amazon is 767.11. So that will be a key support that we look for the bulls to potentially attempt to hold. But as of right now, a bounce attempt, and if we see a rejection here and a lower high, the low of pre-market, 767.58, will also be a key level going forward. So Amazon's going to have a lot of volatility. Keeping an eye on volume. You can see the bear and the bull volume pretty similar at this point, and we'll be watching to see if the bulls can recover from this dip. but definitely with a downward lean, a bearish lean on today after the setback here, first thing pre-market with that selling. Mic check. All right, we'll give this a try here. Breaking up the flow a bit this morning. Thanks for bearing with us. So SPY is backtesting and rejecting the 5-minute moving average resistances, and the hourly chart is backtesting and rejecting the 100 and the 20 period moving average. So we do have a bearish lean on SPY due to our positioning on the 5-minute and the hourly time frame. So definitely keeping a close eye on bearish plays. If Apple breaks that low of yesterday, 116.68, then it will be a decent bearish candidate to be watching for normal healthy consolidation and a pullback. So low of the day right now for SPY, 226.07. We've seen 226.02 act as support a lot, so definitely watching those support levels. CMG is very tight, and the daily time frame's not really giving us a lot of information, aside from the fact that it does appear to be normal, healthy, bullish consolidation at this point. So the 50-day moving average keeps rejecting the price at 390.72, but it does look like a bull flag pattern of consolidation as we get rejected from that level. So getting really tight on CMG and keeping a close eye for if the bulls are going to show up here, and if they do, the high of yesterday is resistance at 392.91. We came about 50 cents shy of that level so far this morning. Biotech bears back in control. These biotechs really struggling to see any kind of follow through to the upside. And as long as the 100-day moving average is resistance, the bears are in control on the daily of XBI. Checking out Canadian MJ sector, CGC, and we're not really getting much information. The bulls are trying to break the high of the day of 919, and we're trading in a pretty tight range so far. We obviously have not broken the high of yesterday. That is the goal and a must for the bulls today across the sector. All of these names must break their high of yesterday to confirm the bullish reversal candlesticks. And we have names like OGI with a double top at $3, the high of yesterday. So that is the level to be watching. And we're not going to get any bullish reversal confirmation if we don't break those levels. So Tesla bulls were out in full force first thing, and we're consolidating. It's normal and healthy on the 5-minute time frame. We are in breakout mode on the daily above the upper Bollinger Band of 210.01. And again, that next resistance is 213.70. So as long as the 5-minute moving average supports hold here, the bulls are in control of Tesla. And keeping an eye on NVDA for this consolidation after a 6-day run. Look at that dump to start the day first thing. All 5-minute moving averages are resistance. In the hourly time frame, we're losing the 20-period hourly support. So for NVDA, it is all about the daily upper Bollinger Band support at this point, 104.45. We have a battle going on for that level. There is a gap to fill at 102.45. So that would be the target if we lose the upper Bollinger Band daily support. FDX losing all hourly moving average supports. The hourly chart looks like a bear flag. Dumping on the 5-minute time frame. The next daily support for FDX, losing the middle Bollinger Band on the daily. I'm looking at 191.21 as a key support level. VRX, we now have a triple top at $15. Must break $15 to see continuation, and if we do break 15, that will be bullish in the short term. So a battle for 5-minute moving averages for SPY, still being rejected, so still weak as long as all 5-minute moving averages are resistance. NVDA looking to the downside. Apple bulls are still holding up as long as we hold the low of yesterday. That higher low pattern continues. BABA already broke the high of yesterday, so the BABA bounce continues. There's not a ton of resistance at these levels for BABA. Looking at 91.48 on the daily time frame, and on the hourly time frame, next resistance is 90.89. So keeping a close eye on BABA. You can see Baidu's seeing a little bit of green as well. Amazon still seeing some weakness after that bearish action pre-market due to news. All 5-minute moving averages are resistance, still exponential resistances as well. But the bulls are defending 100-hour moving average support of 767.10. Key support being tested right now. So if we see SPY break 226.02 and head down to the low of yesterday, NVDA should continue to see weakness as it is at the low of the day. Facebook is weak. We've been watching Facebook weakness now for quite some time. We broke the inside candlestick from yesterday on the daily bearish. 118.51 was the low that we have seen over the past 6 trading days. We broke that, but only by a couple pennies. I'm looking down at 117.61 as the next daily support on Facebook if this weakness continues. VRX, another test of $15. There is a big-time battle going on for VRX at 15. And again, if we see that bull break, the next resistance we are looking at, and there is that bull break. Look at that instant 6 cents to the upside. All hourly moving averages becoming support on VRX. The 5-minute time frame is overbought at this point, but we're looking at 15.38, the middle Bollinger Band on the daily time frame. So a bullish break of $15 and VRX bulls in control for the short term. So NKE, all 5-minute moving averages are resistance. We have filled the gap from the gap up open today. TWLO, bullish start first thing. Now we're consolidating. Need to hold support. We've got 30.49 and 30.32 on the 5-minute time frame, and the clear resistance is the middle Bollinger Band on the daily of 31.24. We've rejected just below that the past 2 days. Close above that middle Bollinger Band, and we'll be looking for this trend to turn around. We already are seeing the first signs of bulls finding support and trying to break the lower high pattern. 31.24 daily middle Bollinger Band, very key resistance. So not much information at all and action so far in the Canadian MJ sector. Still just a lot of tight trading underneath the highs of yesterday. And we need the bulls to wake up and head to those levels to confirm the bullish reversal candlestick from yesterday. So Netflix bull break of the daily inside candlestick. This is normal healthy 5-minute consolidation. We can be looking for a bullish entry here. Support is 125.34. And if we were to lose all 5-minute moving averages, 125.17, that would be our red flag that something is not going according to plan for the bulls. So 126.66, the high of today, is resistance. You can see the bulls buying the dip here, trying to defend 125.55. A little bit of a double low here on these 5-minute candlesticks. Bulls trying to break the lower high pattern and trying to form a bullish reversal hammer. CHK, nice back test and bull flag continuation off of that 5-minute 20-period support of 741. Nice break of the high of yesterday, ignoring the bearish reversal candlestick from yesterday on the daily. We've got 752 resistance, and we break that level. We're looking up really at 780. So bulls still in control on the bounce off the middle Bollinger Band the past 4 days. Nice higher lows and higher highs. MU is very weak so far, so looking at the daily time frame, we have that almost a double top. High of yesterday, 2080. High of today, 2083. All 5-minute moving averages are resistance. Hourly support is 2030. So we have that double top, and we were unable to get towards that $21 level, and we've broken the low of yesterday. So the next support we're looking at on the daily is 2019. So the bulls need to continue to hold higher lows, and 2019 would be an ideal level for the bulls to hold to show the most strength on the daily time frame. Ideally, they would hold that level, establish a new base, and make another move back up towards 21. But as of right now, clear weakness in MU to start today, as we are even oversold on the 5-minute time frame on this pullback. PMCB, bearish reversal 5-minute candlestick being confirmed, but it's coming after a big bull break, and you can see the bear volume decreasing as the bull volume was increasing. The break of 15.8, the high of yesterday, was bullish. Highest price we've seen is 15.95, so we broke that as well. Very nice continuation for the bulls on the daily, forming higher highs. And need to zoom way out on the weekly to find the next resistance, which is always a good sign for the bulls. And looking at 17 cents psychological. And then after that, we're really looking up towards 20 cents. So if the bulls continue these higher lows and higher highs on the daily, they are certainly in control, and we're off to a good start with volume. 7 million shares traded in the entire day yesterday. We're going to pass that today. That's a great sign for the bulls if this strength continues. TRVG, all 5-minute moving averages are resistance, trying to form a bullish reversal candlestick on the daily time frame. Recent IPO, so lots of high risk, high reward. Checking in on Facebook, 5-minute RSI. Not oversold. So we did see a little bounce right there. Resistance is now 118.75. Still rejecting from exponential 5-minute moving average resistances, so the bears are absolutely still in control of Facebook as long as all these exponential resistances are still knocking the price down. So the 5-minute RSI hasn't really gotten too oversold at this point. Dry's support is 492 and then 488. Resistance is 509 and then the high of pre-market 522. Bulls have already made a break over the high of yesterday, and we're looking at 530 resistance as well. So the bulls must hold these 5-minute supports, the 492 and 488 level. And still looking good on the hourly, back testing, trying to hold 490 support. So we already had a bull break first thing and some profit taking after that. And bulls now need to form a higher low compared to the low of the day and then break 509 to show some continuation. Nice bull break on CGC, breaking the high of the day, heading back slowly but surely to that 944 level. We'll see if the bulls can break that at some point today. NVDA resistance, as we are down near the lows. Exponential resistances have been driving the price down all morning. 200 period 5-minute resistance is 104.95. Bulls are forming a bullish reversal hammer from oversold conditions on the 5-minute time frame, so we could be in for a little short-term bounce, but the bears are absolutely in control of the NVDA trend so far today. Keeping an eye on CMG, pulling back a bit. We've got that low of yesterday as support of 387.26, so clearly the bulls are not showing up yet, but we're also not seeing a lot of downside weakness either. Biotech at the low of the day continuing to show weakness. Bears still in control. Checking in on that Netflix bounce. And we did not confirm that bullish reversal candlestick, so that's a bit of a red flag for the bulls. Bullish reversal hammer not confirmed. If we break 125.55, we're looking down at 125.22. So need that green confirmation candlestick, and we currently don't have it for the bulls. Tesla's consolidated after that really strong bull break. This is normal, healthy consolidation on the 5-minute for Tesla. Looks like a bull flag at this point. Hourly RSI is up at 77. So we'll see how significant this consolidation is. And overall, we're watching SPY as well to see how much consolidation we're going to see here. So we now have a higher low on SPY at 226.10. And the high of the bounce attempt was just 226.25. So that's the range we're watching, a little 15-cent range here, as the bears have control with all 5-minute moving averages as resistance. So that next Tesla support, the 20 period, is down at 209.39, but we are still holding exponential moving average supports, and we're looking up at 211.78 and 212.23 as resistances. Keep an eye on the volume. The bulls want to see an increase in bull volume while we hold this exponential support. TWTR, Twitter continues to dump. The bears are in absolute full control. So we fell right through that 200-day moving average. We saw no sign of support. Look at the bear volume compared to the very weak attempts at some bull candlesticks. And we are now looking down at 1707 and 17 even as the next supports. Bears are in full control, but the 5-minute RSI is 19. So we can't anticipate an oversold bounce attempt. But the exponential moving average resistance, as long as that is resistance, the bears are in full control of this pullback. Hourly RSI on Twitter is down at 16, so we are oversold on a lot of shorter-term time frames. There's just not a ton of support down at these levels now that we're losing the 200-day moving average. So 1707 and 17 even. We just hit 1712. So here comes SPY to test the low of the day. If we break 226.07, we're looking at 226.02. Exponential resistance still knocking the price down on these bounce attempts. So the lead bears today are NVDA and Facebook. And we're now seeing Baidu going red. Baba lost $90 support, so pulling back there as well. Apple still holding up like a bull. All 5-minute moving averages holding on the back test of support and still forming higher lows on the daily time frame at this point. Dry's bulls are trying to show up here. Needs to break 509 to be heading back towards 522 resistance. New support established at 498. Bulls really want to hold 498 from here. CGC, that 925 level, that was the high of the day yesterday before we got that new high of the day towards the end. So 925 level from yesterday coming back into play today. DGAS trying to bounce. The 20-period 5-minute moving average is 399, trying to become support here. Natural gas on the hourly time frame, rejecting from just under 350, but we did break the lower high pattern on the hourly time frame. So this tells me that any consolidation we see will be from overbought conditions, and we'll be looking for normal, healthy consolidation. We do have the hourly RSI in the upper 70s, so we could see some short-term upside on DGAS. Just keep in mind that this bull break for natural gas today is changing that trend on the hourly to favor the bulls. So definitely seeing some profit taking from a huge bull move. Just keep in mind that these gains are likely to be pretty short-term. Thanks for the reminder. Oil inventory report in just over 20 minutes. BAC continuing to see weakness, so it was the weakest name yesterday. Weakest bank, I should say, yesterday. One of the weakest. All 5-minute moving averages are resistance. 2261, the high of the bounce attempt. We're testing that level right now. Bulls have to get back above 2268 to be looking good on the 5-minute time frame. And key support on the daily is 2233 for BAC. FCX resistance. Bulls buying the dip a little bit. We've got 1418 and 1420 5-minute moving average resistances. If we get above 1420, all moving averages on the 5-minute will be support, and we'll be looking up at the high of the day, 1429. So SPY bulls, a little bit of a double bottom at the low of the day, 226.07 and 08. And resistance is 226.25. And keeping an eye on oil, we saw some correlation on the 5-minute time frame with oil and SPY, and seeing it again. I'm seeing these two red candlesticks, a green, two red, two green. So there is similarities on the oil 5-minute time frame to be keeping an eye on when watching SPY. So Netflix bulls trying to build a base here at 125.50. We have held that support level 3 times on these 5-minute candlesticks. Resistance is 126.15, and then the high of the day, 126.66. Tesla looks to be, well, the bulls are holding up on the 5-minute time frame. We have to keep in mind the extreme bullish run we've seen over the past couple of days, so consolidation will be normal and healthy. But the 5-minute time frame has all moving average supports, and we are still holding exponential supports. We just closed right on the exponential 8 period, or actually just below it. But it's normal. It looks like nice controlled consolidation at this point. Certainly no dump, no big profit taking. 20-period moving average, 209.54. And as we know, as long as the 20-period 5-minute holds, the bulls do control the trend on the 5-minute. So CGC rejecting from the 20-period 5-minute resistance. Now it's 919. Bulls really want to hold 908, the low of this little consolidation. If we break 908, we're looking down at $9 psychological. 925 and 944 are resistances. Bulls are trying to turn around this trend and trying to get some higher lows and higher highs on the 5-minute. We just got our higher high. Now we're looking to establish a base of higher lows, ideally at 908. OGI, $3 was that double top. And we're pulling back pretty significantly from that $3 level. And you can see that CGC got a new high of the day and OGI not even close. So a double top for OGI at $3. If we don't break $3 today and turn it into support, we are not going to confirm that bullish reversal hammer from yesterday. I'm going to look at XBI rather than LABU, but XBI is a bearish break of the inside candlestick, which is translating to a bearish break of the LABU inside candlestick. Support for XBI is 60.90, and support for LABU is down at 34.31 from here. Bears clearly in control, rejecting from exponential resistances and heading to the downside. APH needs to see a break of 460, the high of today. The bulls just saw, let's see here, 449 was the low, and we just hit 450. So we're testing the low of the day. Obviously, if we see a break, that's bearish. And we have not broken the high of yesterday, 465. So as of right now, the way the sector is starting today, it's very weak. Well, I shouldn't say very weak, but it's not the start the bulls were looking for to confirm the bullish reversal candlesticks yesterday. We need the bulls to show up here in the late morning or in the afternoon. If we do not break the highs of yesterday, I know I keep saying this, but if we don't break the highs of yesterday, the bulls fail, in my opinion. And we see further weakness with yet another inability to confirm a bullish reversal candlestick. UVXY, little pop. 20 period is 775. High of the day is 782. As SPY is heading back down to the low of the day, it's a double bottom at that level. Hourly time frame. I don't see a cup and handle because we would have to reject from this resistance and then consolidate, so it's a little bit too early. Resistance is 57.58, and we are seeing a lower high at this point, but the bulls aren't showing any slowdown in terms of consolidating after being unable to break that resistance. So if we were to see a lower high and then consolidate for a few hours, then we would look for that pattern potentially on O, but the bulls are still in control on the 5-minute. And in terms of O zooming out, it is not a cup and handle on that time frame because the right side of the cup needs to be lower than the left side of the cup. That's part of the psychology of the pattern. So IIPR resistance from here is all psychological until we get to 20. So 18, 1850, but you are absolutely correct. Low volume is a lot easier to manipulate. Apple still back testing and holding 5-minute support, and it's still holding 116.96, 116.88, and then the low of the day. So keeping a close eye on SPY, but as long as 5-minute moving averages hold on Apple, obviously the low of yesterday will hold because it's below those levels. IWM, last 5-minute support is currently the low of the day, 137.44 right there. QQQ, weakness, all 5-minute moving averages are resistance. So we are seeing some weakness in these markets first thing. It's obviously not significant, but it is a bearish start to the day across the board. But these SPY bulls are defending these low 26 levels. So NVDA seeing a little bit of a bounce. We're back testing some resistances. At this point, it is an oversold short-term bounce in my opinion. 104.55 is resistance. If the bulls see some strength, we'll be looking up at 104.98, the 200 period 5-minute. CGC, a break of 899, which was a consolidation low, would be a setback for the bulls. Need to hold 899 to progress with higher lows and higher highs. Low of the day test on SPY. BWLD support from here. Nice bear break of 164.80. And really looking down next, 163.30. Next support, but that break of 164.80 was exactly what the bears were looking for. USG, nice bounce and continuation. Next resistance from here after the high of the day. Not a lot up until 31 psychological and then 31.30. And nice bounce after consolidation. SPY now has a triple bottom at 226.07 and 226.08. Very clearly, the bulls are defending that level. But they are also still struggling to progress by setting any higher highs. So checking back in on the dollar, bulls are trying to bounce on the dollar hourly at this point. Could be forming a bear flag. Still a little early. We'd have to wait a couple more hours to play out. So a little short-term bounce just above oversold conditions, which means gold is consolidating and showing some weakness. There is still lower highs on the hourly for gold. We needed to see a break of 1142 to show a lot of strength, and so far today we've topped out at 1136.89. And now we're breaking that higher low pattern on the hourly with this little bit of gold or dollar upside, I should say. So gold still certainly weak. IWM channel is 137.44 support, 137.73 resistance. Rejecting the last few candlesticks at that resistance, but closer to a bullish break than a bearish break from that channel at this point. So Tesla, bulls trying to show up after that long drawn-out consolidation on the 5-minute time frame, but considering the strength we've seen, that's still normal and healthy. And looking at resistance of 211.78 and then the high of the day. Netflix bulls trying to show back up as well after their consolidation. Same thing, bullish consolidation on the 5-minute. No big red flags in terms of increased bear volume. And the question now is, can we hit a new high of the day? Or will this be a lower high as we reach an equilibrium tightening pattern? CMG is up at the high of the day. But still not a lot of volatility in either direction of CMG. We want to see volume and volatility pick up. Otherwise, it's going to just be time decay on any options for CMG. Oil inventory report in 10 minutes. Certainly going to have an effect on the S&P 500, in my opinion, at least in the initial reaction. Checking back in on Amazon, which is still showing some weakness from the bearish action pre-market. We hit a new low of the day just then, 20 minutes ago. So lower highs and lower lows, the bulls have to break 768.63 to break the lower high pattern on the 5-minute. So break over resistance for IWM, trying to turn all 5-minute moving averages back into support. SPY seeing a little bit of upside as well, still battling resistance there. SPY has to get above 226.26 to be in a similar setup to IWM. Bitcoin hourly RSI is now up at 89. And weekly resistance, not much until 815. We're above that level. So looking at 845. And one thing is for sure, we are seeing SPY very tight range the past few days. And obviously with the holidays coming up, that can be anticipated. Facebook did form a higher low and a higher high now on the 5-minute with this big bullish candlestick. High of the day is 119 even. 5-minute resistance 119.02 and 119.16. But bulls attempting to show up here. We are bouncing off the hourly 200 period support and forming a bullish reversal hammer. 119.16 is hourly resistance, and the last 5-minute moving average resistance. That's the goal for the bulls to turn into support to be looking good on those shorter term time frames. But it is a clear increase in bull volume and higher low, higher high now on Facebook with support of 118.55. Amazon's trying to break its lower high pattern as well, 768.63. We just came within 4 cents of that level. Trying to turn around the lower high pattern on the 5-minute. SPY has a decent amount of hourly resistance. The 20 period is 226.26, and the 100 period, which rejected the price all yesterday, is 226.32. And we've got this oil inventory report coming up. I have no guesses as to what the reaction to the oil inventory report will be, but we can anticipate that whatever it is, that SPY is going to be affected. Seeing volatility pick up a little bit here in SPY as we head into it. And as of right now, oil is seeing some weakness on the 5-minute time frame heading into this report. Clear lower high pattern on the 5-minute. We'll see if the bulls are able to break that. MU oversold bounce on the 5-minute. Resistance is 2064 and 2069. And the biotech sector is now down over 1%, and they are still very weak, still lower highs on the daily. 60.90 is XBI support. A break of that level, and we're looking at the lowest price we've seen on this consolidation of 60.11. So Tesla bulls holding up fine, or let's say Netflix bulls holding up just fine on the 5-minute. And Amazon now has a double top on bounce attempts at 768, 59, and 63. SPY is still hovering above the low of the day, triple bottom. TWLO, nice bull break after consolidation, increase in bull volume, so trying to establish that higher low at 30.30. Resistance, 30.75 and 30.99. Bull still in control on the 5-minute after establishing that higher low. All 5-minute moving averages back as support. We can see when the bull volume shows up for TWLO, it does move quickly. That is correct. Baba Daily is trying to get over the 4-period exponential moving average of 90.18. Bulls would love to close over that level today and have us looking at the middle Bollinger Band daily as the next resistance. Keeping in mind we're still in a very clear lower high, lower low pattern. But remember that chart I posted that had that downtrend resistance line and that horizontal support line. And I will pull that back up. So this is that chart. Clear support line, clear downtrend resistance line, very, very tight. We're going to see a break likely by the end of the year, and if not, certainly right at the start of the new year, as the range in here gets tighter and tighter. And I will post that chart in the alerts and patterns room again. So here comes the inventory report, and we'll see what kind of initial reaction we get. Bears are anticipating weakness, looking at the low of the day now on oil as we head into the report here. SPY low of the day test. Oil is dumping. We'll see if this holds up. We know knee-jerk reactions are common. SPY bulls still holding out at this low of the day. 226.02 held a lot, and it's the low of pre-market. So we've got a battle here on SPY. And there is a wall of support here on SPY at 226, the low 226s. Battle's not over yet, but the bulls are holding their ground. Oil bulls buying the dip a bit. It is a big bullish doji on the, or I should say a hammer on the 5-minute. So a quick turnaround on oil, not seeing the turnaround aspect show up on SPY. But oil dipped down to 52.91 and it's currently up 40 cents from that level. So we now have lows on SPY at 226.07, 08, 08, 06. And while we haven't seen any follow through for the bulls, they are certainly defending that level. So we've got SPY reacting with a bullish reversal candlestick, a hammer on the 5-minute. And we'll see if it can confirm it and get over 226.25. And our bulls are still holding up, Tesla and Netflix. CMG is up at the high of the day, so the bulls are making an attempt here. As we know, it's been very slow and very tight on CMG. But it does look like a bull flag is forming on the daily. I am definitely looking in the bullish direction of CMG. And we're looking at 395.90 and then 400. And you look at the daily time frame, and we had previous consolidation last week that's looking very similar to the consolidation we've got going on now. And a close above the 50-day of 390.78 will certainly have us looking to test 395.90, the high of this bounce in the short term. Definitely keeping an eye on the CMG bulls. Low of the day again for SPY, new low, 226.02. And then the low of yesterday, 225.88. Increasing bear volume on the 5-minute, checking back in on oil. And oil bulls are still struggling a little bit here. Certainly higher than where we dipped down to, but still bears in control of oil. Apple is absolutely holding up better than SPY. It's held its 20-period 5-minute support the entire day, every test. That's currently 117 even. NVDA struggling at 5-minute resistances, but still testing them. 104.99, 105.03, 105.23. All 5-minute moving averages are still resistance. But certainly a decent bounce from the low of the day. And we'll see if it's just going to be another lower high if the bulls cannot get over 105. IWM, so it had just another lower high on the 5-minute, a little fake out there, and now a new low of the day on increasing bear volume. And we see SPY bulls still defending 226.02. We now have about 5 lows at that level. But IWM bears are in control with the lower high, lower low pattern, checking the 5-minute, or I should say the hourly support. And if we lose 137.58 this candlestick, we will be looking down at daily support from here, which is the low of yesterday, 136.99. So the bulls would have to break 137.86 on IWM to break the lower high pattern. And look at the reaction SPY is having, bouncing off 226.02 for the 5th time now in the past probably 4 hours of trading. That is the support level to be watching. FCX just lost all 5-minute moving average support. The bulls are still desperately trying to cling on to 14. If we break 14, we're looking down at hourly support, and we're losing that too. If 14.10, if we close below that, this hourly candlestick. So the next level after 13.97, there's not a ton of support in this range. I would be looking at 13.74, the high from Monday's bullish reversal doji. Previous resistance, now support. Netflix, perfect continuation, bull break. Normal healthy consolidation, decreasing bear volume. It did end up being a bear flag and leveled out. Increase in bull volume, really strong move. So the daily resistance we're looking at from here on Netflix is up at 127.43. Netflix has given some nice bull indications on inside candlestick breaks on the daily time frame over the past few weeks, and today is just another example. The signal for bull entry was when 126.30 broke, and here we are at the high of the day, heading up towards 127 psychological. Let's see if Tesla can follow suit. Pretty similar consolidation. And Tesla 211.78 just broke. Now we're looking at the high of the day, 212.23. And the SPY bulls need to see a break of 226.25. That's the high of the bounce attempt since we saw the bears take over on the 5-minute. But we still have all those hourly resistances. 226.26 and 226.30. So it's pretty much a battle between 226.02 and 226.30 at this point for SPY. As the CMG bulls continue to show up. And look at the last 40 minutes of trading on CMG, all bullish action. We'll see if we consolidate and form a higher low and head towards that 395 resistance, the highest level we've seen on this bounce. So JNUG is trying to break the lower high pattern on the 5-minute. They need to get above 426 to do so. And here we are at that level. Then we're looking at 429, the last 5-minute moving average resistance. Checking in on gold. It is a bullish hammer forming on gold as the dollar is showing weakness on its bounce attempt. So gold will need to see a green hour between 11 and 12 a.m. Eastern to confirm this hammer and be looking back up towards the high of the day, 1136.93. And we'll see if JNUG can turn around this lower high, lower low 5-minute pattern. Breaking 426 is step number 1. So NVDA is seeing its bounce recovery still underway. Last 5-minute resistance is 105.22. And the candlestick forming here, we did lose the 20-period hourly, so we're back testing 105.20 hourly 20-period resistance as well. So that's a very key level for NVDA here. 5-minute and hourly resistance lining up in the 105.20s. High of the day test on Tesla. And the 200-day moving average resistance on Tesla, 214.54. And to break the lower high pattern on the daily, Tesla has to break 213.70. So even with all this bullish action we've seen, if we can't break 213.70, it's just another lower high in the longer-term daily pattern. Canadian MJ, low volume, not really doing anything this morning. Getting pretty tight on the 5-minute. CGC needs to see a break of 917 to be heading back towards the high of the day. NUGT rejecting from the 20-period 5-minute resistance of 602. There is hope if the bulls in gold confirm this bullish hourly hammer. And we did just see NUGT break 602, only by a penny, but trying to break the lower high pattern on the 5-minute. JNUG and NUGT bulls need to form a higher low on this consolidation and then see a break of the high of this bounce attempt. And the hourly candlestick for NUGT is defending 596, the 20-period moving average. And for JNUG, defending it as well, 421. Watch that hourly 20-period. That's a key level going forward. SPY has now rejected from the 20-period 5-minute resistance about 6 times on these bounce attempts. It's currently at 226.20. Checking in on oil now that it's settled down a little bit. Definitely a bearish reaction. Inside candlesticks forming on the 5-minute as the range tightens, reaching an equilibrium. Netflix continuing to show lots of strength. Big bull volume, big bull breakout. Daily upper Bollinger Band resistance is up at 128.66, and that's where we will be looking after 127.43, the high we've seen over the past month on Netflix. Bulls in full control. And Tesla bulls trying to do the same. Still need to break that high of the day. PCLN's back at the high of the day. That resistance on PCLN is the middle Bollinger Band on the daily time frame of 1513.45. So nice higher low, higher high pattern the past 3 days on this bounce for PCLN. Keeping an eye on the oil 5-minute chart. We now have 2 inside candlesticks in a row, working on a third. Apple now is losing its 20-period 5-minute support for the first time, and if we lose 116.90, all 5-minute moving averages will become resistance. As we see SPY heading towards the low of the day, we know there's a wall of support at these levels. Amazon clear resistance in the upper 768. So we now have 3 tops at those levels, and we're going to see a clear break in the near-term future. A break of 769 would be bullish, and a break of 767.41 would be bearish. And I think a lot of that will depend on what we see happen with SPY here as we are close to the lows. CGC very, very tight. Support is 908 and 904. Resistance is 917 and 925. And the 5-minute chart is just getting tighter and tighter, trading straight across. Bulls need that 20-period 5-minute support of 914 for the first time today. It has rejected the price on 3 5-minute candlesticks so far. A battle for Tesla at the high of the day. This is a tough 212 level. Bulls still in full control, but unable to get that push over the edge to a new high of the day just yet. And oil now has 3 inside 5-minute candlesticks in a row as the range gets tighter and tighter. So Tesla, a bit of a double top as we're now consolidating after that failed new high of the day. We'll see what this consolidation looks like in terms of volume and significance. 20-period support is 210.67. So IWM seeing that triple bottom as well as SPY. Descending triangle pattern, it looks like. Not really a good-looking one. But the psychology is a base horizontal level of support in these markets and some lower highs. And oil now working on the 4th inside candlestick on the 5-minute time frame. Checking back in on the dollar. It is still trying to bounce. It does still look like a bear flag on the hourly. But gold does not look like a bull flag. We're not seeing that kind of direct correlation. Gold still looks fairly weak on the hourly. So NVDA is still holding up, but still struggling around these 105 resistances, unable to get over all 5-minute moving averages. 105.16, the high of this bounce attempt. So Tesla now a little bit more significant pullback from that double top. Still not enough to change the trend or anything like that, and we're watching volume, which looks like it's going to be decreasing for the bears. Low of the day test on SPY. NVDA bull volume on the bounce does outweigh the bear volume, but we have to watch these rejections from 5-minute moving average resistances. Support is 104.67 and 104.50. And obviously, if we see SPY break 226 support, we'll see if NVDA weakness follows. So IWM has already broken to the downside. We'll see if SPY is going to follow suit. Natural gas has changed the trend on the hourly to favor the bulls. And we want to hold the bulls want to hold 3,444 on a back test, and we just pulled back and bounced off of 3,446. So 350 is resistance. The high of this move is 3,497. And we need to see bulls hold 3,444 to progress, which they are currently doing. So consolidation certainly warranted after such a strong move on the hourly time frame, but the bulls have regained control on these shorter term time frames, and we're forming a bullish reversal candlestick on the daily that needs to be confirmed tomorrow with that inventory report. So this now makes more than a half dozen support bounces off of 226.02 to the penny on SPY, including yesterday afternoon. And volume's fairly low on SPY, but again, that's to be expected. Baba is seeing weakness. That increase in bear volume there right at the end, losing all 5-minute moving average supports. As soon as we broke 89.90, we had a lower high, unable to break the high of the day, and then a lower low. So 89.90 broke the higher low pattern on the 5-minute, and it's been nothing but pullback since then, giving back most of the gains on the day. Support is 89.69 and 89.55, and the daily chart is showing an upper wick of profit taking, rejecting from exponential daily resistances. I definitely think the lack of volume that we're seeing to start this week has something to do with the tight ranges in SPY. and the holidays. And I don't think that's going to go anywhere. We've got shortened trading weeks due to the holidays next week and then the following week due to Christmas and New Year's. VBIO has huge volume. It's the highest volume we've seen in over 3 months already today, just an hour and a half into the trading day. Bulls are breaking out above the upper Bollinger Band, 161, and we have clear resistance at 184. And the high of today is 180, so we must break that level. Here's SPY, new low of the day, breaking 226.02, 225.88, the low of yesterday. Increasing bear volume on SPY. So SPY bears want to see a bit more convincing break from this 226.02 support level. We have broken it, but not in a convincing way. So we'll see how long this SPY weakness keeps up. It's certainly not significant in the sense that we're not dumping or anything like that. We're rejecting from hourly back tests of previous support, now resistance, the 20 period, and we have all 5-minute moving averages back testing and rejecting the price all day. So now we're 10 cents above the low of yesterday, and if we break that level, we're heading back into the range where we were in that tightening 4-day inside candlestick pattern, where there is a decent amount of support build up due to how much trading we did do within that range. Big bounce on the dollar. Big dump on gold. Good eye on that. So the oversold bounce, or bouncing just above oversold on the hourly time frame for the dollar, is now underway. Certainly a lot less likely it's a bear flag due to the significant size of that bullish candlestick we just saw form. So SPY bullish reversal candlestick attempting to form here on the 5-minute. Bears now have control. Still exponential resistances. The 20 period, which has rejected the price on 5 attempts to get over it, is 226.15. We've got the Netflix bulls still in control. Tesla still has 212 resistance. Keeping an eye on Apple as we approach the low of the day. And if we lose all 5-minute moving averages on Apple, which we just did, now trying to regain them. But if we lose 116.90 support, we will be looking for Apple to head back down and break the higher low pattern on the daily time frame that has been intact for weeks. All depends on SPY pullback here, which again is not really forceful to the downside. It's just pretty weak at this point, as we still see a very tight range. We haven't even seen a 50-cent range on SPY today. WHR 5-minute moving averages all support 179.96. Consolidation low here is 181.04. Bulls still holding very strong with higher lows and higher highs on the 5-minute. If we break 101.04, next support is down at, I should say 181.04. Next support is down at 180.13. So 5-minute chart absolutely favors the bulls. And looking at the daily time frame, very strong break of 180.88. And that's a perfect bull flag on the daily time frame. And then the bull showed up big time the past 2 days for continuation. Daily upper Bollinger Band 182.50 is the next resistance level to watch. PCLN has a high of 15.0586 and then a lower high of 15.0451, but we also have a higher low. So we have a tightening range, and the range I'm watching right now is 14.98 support and 15.0586 resistance. So bulls are still looking good on the daily time frame, but it does look like a potential bear flag on the daily. So we need to be very cautious of that. If we don't see the bulls close strong today, I would be a bit weary, as it's just a pretty weak bounce after a big 5-day pullback. So definitely, if we close below 1500 today, I would be looking at it more likely than not to be a bear flag on the daily time frame on this bounce attempt. So right now, we're still absolutely holding up just fine on the 5-minute time frame. Not really seeing much movement in either direction. A $10 range is very, very tight on PCLN, which is what we currently have today. CMG, consolidation is normal and healthy. There's no big red flag on volume. And even though we have a 5-minute candlestick here with a spike in red volume, you look up at the candlestick and you see a lot of that volume was the bulls making another attempt at the high of the day. So we still have all 5-minute moving averages as support. A rejection, or I should say a loss of 390.82 would lose all 5-minute moving averages. That would be a red flag for the bulls. NVDA still struggling at 105. New support established at 104.50. CLF bulls are trying to turn around the trend on the 5-minute time frame. They need to break 927 to do so. And looking on the daily, very clear lower high, lower low pattern on the daily. Middle Bollinger Band resistance is 958. That needs to become support for the bulls. And we have not confirmed a bullish reversal candlestick with any kind of strength since this pullback started. So yesterday was a nice bullish reversal candlestick on nice bull volume. But as of right now, we're not doing anything to confirm that candlestick today. So shaping up for a potential inside candlestick today to be watching tomorrow. But unless the bulls can close above 958 and turn that daily middle Bollinger Band into support, looking like we're just going to see a fairly tight range today on the daily. Must hold support on the daily is 870 and 857. Still maintaining a higher low compared to 857. Bulls really want 870 to be the new higher low. TWLO, huge spike on big volume on those rumors. Testing the middle Bollinger Band daily resistance. I do consider the exponential moving averages as support and resistance on the 5-minute. When we're in very strong bull moves, we see the price ride those up, and when we're dumping, we see them drive the price down. So it's not just a signal when they cross each other. I definitely look at support and resistance levels. And SPY bears are in full control, in my opinion, on the 5-minute time frame as long as the 20 period is resistance, 226.14 and dropping. GOOGL, bears are in control. 20 period 5-minute resistance there is 808.32. Bulls would have to break 810.14 to see a higher high on this bounce attempt after the original dump. And we're not too far above the low of the day, 805.10. Checking the candlestick on the daily time frame. Little 2-day bounce the past 2 days, but not amounting to much. Very clear support, 804.50 and 805.10 from Monday and today. Bears would love to see a break of 804.50. Correct, CMG is below the exponential, but when you're seeing consolidation in the way that we are seeing on SPY on the 5-minute, I really only look at the exponential moving averages as support and resistance on really, really strong moves where we are in full-on breakout or full-on breakdown. So when we are not in that scenario, like CMG today hit a new low of the day and then rocketed to the upside, so there's been a bit of back and forth. But the point being, I am much more concerned with the 20, 100, and 200 period moving averages for the overall look of the 5-minute chart. And I'm more concerned with the exponential moving averages on the really short term. So if you're looking really short term and trying to hop in on a bull breakout or something like that, then you're looking at the exponential moving averages. So Netflix on the 5-minute, we had a very strong bull break, and now we're consolidating and testing these exponential supports. But the pattern for Netflix has been higher low and higher high, so the bulls have been in control all day. I'm not doing a good job of explaining what I want to convey here with the exponential moving averages. But I will absolutely look at them, but losing them to me is nothing more significant than indicating short-term further consolidation is coming. It doesn't really do anything to change the overall trend. So if CMG were to lose all moving average supports, the 100, 200, and the 20 period, that would be a lot more significant of a bearish loss than the exponential moving average. Pretty much the exponential moving average being lost as well. The bulls aren't very, very strong in breakout mode, but they're still perfectly fine and healthy on the overall 5-minute chart. And I will be thinking on how to better explain that once I am no longer live. So Tesla getting very, very tight. 210.90 is clear support, and we have the high of the day as the resistance. And if we break 210.90, we likely lose the 20 period 5-minute support as well. So bears are still in full control of the market. We've got Tesla testing key support of 210.90. Apple still barely clinging on to the higher low pattern on the daily time frame. So I'm going to sign off here. And looking like this old mic will be good to go for the foreseeable future until we get the cable needed to fix the newer mic, but we'll work with what we've got, and I will be back on in the afternoon. So I appreciate the patience. Sorry for busted eardrums, and I will see you in just about 10 minutes to continue coverage in the chat room.